on August 11th of 2020 that we announced to the world that we had acquired $250 million worth of Bitcoin, along with a tender offer. On the day before, our stock was about $121 to $122 a share. Today, the stock closed at $292 a share. If we look at the performance of the company stock since August 10th, 2020 to close of business 4 p.m. Eastern Time, February 1st, you can see the MicroStrategy stock is up 117%.
In August 2020, Michael Saylor's business intelligence and mobile software services firm adopted the Bitcoin strategy, becoming the first publicly traded company to have the crypto asset on its balance sheet. It began by investing $250 million in the crypto asset, and has since invested $4 billion in the leading crypto asset, yet MicroStrategy has no intention of backing out of this Bitcoin bet. It is currently the publicly traded company with the most Bitcoin holdings, which its executive chairman and other executives intend to protect with future purchases. Saylor, the firm's co-founder and former chief executive officer, discusses how MicroStrategy has fared since it adopted the Bitcoin strategy in 2020 during the company's fourth quarter earnings call. Before we get into the video, please don't forget to subscribe here at Market Empire and hit the notification button.
We pick a number of different benchmarks. I think the most important benchmark is Bitcoin's performance. And you can see from this chart that Bitcoin, notwithstanding the fact that it is known by all to be volatile. Everyone that talks about Bitcoin talks about it being volatile. Nobody that talks about Bitcoin actually points out that despite its volatility, it is the #1 performing asset over the past 2.5 years. So we can see Bitcoin is up 98% versus August 10th, 2020. And that's just a really critical day. So MicroStrategy stock is levered against the Bitcoin. And so through our execution, we've been able to outperform Bitcoin as an index. So we're pretty pleased with that. We contrast the performance of Bitcoin to other major asset classes and indexes. And you can see that while Bitcoin's up 98%, a diversified portfolio of high quality companies, such as the S&P 500, is up 23% in that same time period. The NASDAQ is up 8% over the course of the 2.5 years. Gold is a loser. Gold has lost 5% since the summer, since August 10th of 2020. Bonds have been even worse performers. So if you had invested your treasury in long dated bonds like the BOND index, you would be down 16% in your capital. And although people often talk about gold and silver as money, you can see that silver is even a weaker monetary asset than gold. It's down 19% over that time period. So benchmarking a digital commodity, or in this case, a digital scarcity like Bitcoin versus all of these other asset classes, you can see that Bitcoin has been the strongest performer, not by even a small amount, by a factor of 5 to 10x over other options. We also benchmark ourselves against big tech stocks. And so if we look at big tech, you can see that Google, Apple, and Microsoft, which are 3 effective digital monopolies and 3 of the strongest companies in the world, without dispute, they're up respectively 36, 29, and 21%. They've underperformed Bitcoin by a factor of 3 to 4 or 3 to 5. And MicroStrategy, of course, has outperformed them all substantially. Now, Netflix, Amazon, and Meta Group, all down, minus 25, minus 33, minus 42. So this is a sobering observation, because most of those names are actually monopolies, and they have overwhelming, crushing domination. People often ask us, so why did we do this, and are we pleased with the result? And of course, there are lots of headlines about accounting charges and quarterly losses or GAAP losses. But as you can see, if you're a shareholder and your choice was to choose from any of the bars on this screen, MicroStrategy is still the number one choice, and Bitcoin is the number two choice. If what you want to invest in is commodity, Bitcoin is the winner as a commodity and asset class. And if you want to invest in a security, MicroStrategy's worked very hard to provide shareholder value to our investors. 2022 was a brutally difficult year on a macroeconomic basis, as short-term interest rates went from effectively nothing to 4.5%. And that resulted in a drawdown in all financial assets that was quite painful. I expect as we go forward, there'll be some normalization in 2023 and 2024. And I think the general macroeconomic environment is rotating to a more beneficial place for us and generally for the Bitcoin community. We have always focused on Bitcoin rather than crypto. And so if you look at the microeconomic situation in the past 12 months, most of the crypto enterprises and the crypto assets and the crypto use cases have melted down in that time period. Of course, we know the stories of the bankruptcies of BlockFi and Celsius and FTX and Genesis and Voyager and Alameda. And we also know about the meltdowns of all the crypto tokens, the Luna token, the Terra token, the FTT token, etc. In our opinion, these were all very weak use cases, and they were very fragile structures, and it was a matter of time before they do melt down. The meltdown of that has created short-term negative headwinds for Bitcoin because Bitcoin is cross-collateralized with all these other cryptos. But long-term, the rationalization of the crypto market will be beneficial for Bitcoin. It is educated an entire generation of investors on the benefits of Bitcoin as a decentralized digital commodity and the benefits of not having counterparty risk. It's made, I think, pretty clear what the difference between an asset with an issuer versus an asset without an issuer. And it's also illustrated the benefits of being able to self-custody and the risks of being dependent upon another custodian. The reason that MicroStrategy was able to get through this entire crypto winter is because we weren't exposed directly to any cryptos, nor did we do business with any of the crypto exchanges. And we didn't do it for very clear reasons, because we don't believe in the value proposition of unregistered securities. And we felt that at some point, eventually, the combination of risky behavior in the crypto industry and the ethical and the legal overhang of the unregistered securities would eventually create a liability. I think as we go forward, you're going to see much stronger institutions that will be entering the space, and they're going to be entering because the industry has rationalized. So the future is fewer assets, better institutions, less of the crypto risk taking. If there is any other result of the crypto winter, it's that we can see that everywhere in the world, regulators and the general public are enthusiastic about the promise of digital assets. They're hungry for a clear digital asset framework. I think that there'll be more focus on creating a constructive framework. And I think people understand better why you can't create a digital asset framework based upon unregistered securities without proper disclosure. We've said before, the only real safe haven for an institutional investor is Bitcoin. Bitcoin is the only universally acknowledged digital commodity. And so if you are an investor, Bitcoin is your safe haven in this regard. The others are all question marks. They're all generally unregistered securities, and they operate in a regulatory gray zone.
Saylor believes that 2023 and 2024 will usher in exciting new developments for Bitcoin, especially now that some bad actors have been eliminated from the system and the general public is better informed about the industry. How do you feel about Michael Saylor's evaluation of MicroStrategy's Bitcoin wager over the past 2.5 years? Was the Bitcoin strategy a wise choice for the American company? Leave a comment with your ideas down below, and we appreciate you tuning in to Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.